So we'll start off with a quick introduction. I'll explain the tax rate, the corporate income tax rate as proposed by the Federal Tax Authority, what persons are subject to tax, what income is subject to tax, the basis of taxation, what persons are not subject to corporate income tax, what happens if you have an entity or branch registered in a free zone, how do you compute taxable income, what expenses can and cannot be deducted from such income, what examples of income are exempt from corporate income tax, what happens if an entity makes a loss, the computation of taxable income, and the calculation of corporation tax liability, with some final thoughts. Let's move on. Guys, really important, what are persons that are subject to corporation tax? So what are taxable persons, and on what basis are those taxable persons subject to taxation? So taxable persons, guys, split into two types. A natural person. Now, this is quite unusual. The correct title, guys, is corporate income tax. So the income tax element applies to the natural person. Natural persons are not corporates, they are individuals, but they are still subject to corporate income tax, as you'll soon find out. And the second category, guys, is a legal person, i.e. a company. So natural persons and legal persons are effectively subject to corporate income tax. Let's have a look at that in more detail. What do I mean by a natural person? Well, it's an individual. They might be living anywhere in the world. However, this is an important point. If an individual engages in business, undertakes an activity in the UAE that requires a commercial license, then that person is a taxable person. If an individual that undertakes an activity as a sole trader or a partner in an unincorporated business will be a taxable person for corporate income tax purposes. So let me make that clear. If you are an individual who, let's say, is a freelance consultant that requires a commercial license to provide consultancy services in the UAE, you're subject to corporate income tax. If you're a sole trader or a partner in an unincorporated partnership, then as long as that sole trader business, the activity conducted by that sole trader business or that unincorporated partnership, if it requires a commercial license, you're subject to income tax. Now, on what's the basis of taxation? According to the consultation document, guys, income of such a natural person will only be subject to corporate income tax, guys, if it's earned from their business activity carried out in the UAE on an ongoing and regular manner. So only on the income earned from that activity which requires a commercial license will be subject to corporate income tax. Any other income earned by a natural person, an individual, it has been made clear by the Federal Tax Authority that it has no intention to parallelly tax any other income of a natural person. Effectively, any other income that does not require a commercial license to earn it, such as employment income, dividend income, interest income, rental income, gains, so on and so forth. So it's quite important that we realize a couple of really important points. Only the income generated from the activity that requires a commercial license is subject to corporation tax. So if you are planning to conduct an activity in the UAE, it really is important that you establish whether that activity requires a commercial license. And the license, as you all know, is awarded by one of many authorities. Now, a legal person, this is really important. If you are an entity, it is really important to identify the resident status of that entity in order to establish the basis of taxation. What do I mean? So if an entity is resident in the United Arab Emirates, what do I mean? If it is incorporated, registered in the UAE, or if it is not incorporated, registered in the UAE, incorporated somewhere else, but it's centrally managed and controlled in the UAE, then these businesses, these entities are deemed to be resident in the UAE. Now, what do I mean by centrally managed and controlled in the UAE? Amongst other things, a really important factor is to see where the board of directors conduct their commercial or take their commercial strategic decisions on behalf of that entity. If the board of directors meet and make decisions, strategic commercial decisions on behalf of the entity in the UAE, then that entity, even though it's not registered, incorporated in the UAE, is UAE resident for tax purposes, and such entities, along with those that are incorporated in the UAE, will be taxable on their worldwide income. That's really important. And of course, if that income is subject to tax in the overseas country as well, then there is potential double tax relief available. We'll cover that later. Now, what if the legal person, i.e. the company, the entity, is not resident in the UAE? Please remember, it's not resident in the UAE. That means the entity is not incorporated in the UAE, or it is not centrally managed and controlled from the UAE. So a foreign legal entity, guys, is only subject to corporate income tax on the income earned from a permanent establishment in the UAE or UAE sourced income. I discussed what that is. So any entity not resident in the UAE is subject to corporate income tax, in essence, on the income earned from the PAE and on sourced income. Now, just to talk to you about in general, guys, please note, when I said a entity incorporated in the UAE, it doesn't matter where that entity is located. It might be located in the mainland or the free zone. It falls within the purview of corporate tax. Although, as you'll soon find out, free zone entities do benefit from a potential tax holiday. We'll get to that in due course. Now, it's important to realize, therefore, establish the treatment of certain types of entities. For example, partnerships. As you know, there are different types of partnerships. Two major types. Partnerships that are called limited liability partnerships, or partnerships that are limited by shares, are treated as entities. What do I mean by that? Any income earned by such partnerships will be taxed at the entity level. However, if you are a partner in a partnership which has unlimited liability, so any general partnerships, unincorporated partnerships, or limited partnerships with unlimited liability, these are considered to be fiscally transparent. What does that mean? The income will not be taxed at the entity level. It will be taxed at the hands of the member or the partners. So each partner of that particular partnership will be subject to income tax, corporate income tax on the partnership's income, their share of the partnership's income. So it's important that you appreciate that. Now, also, what happens if you have partners residing in the UAE, for example, and they're part of a foreign unincorporated partnership? So to get rid of any complexity, the UAE have decided to follow the tax treatment in their jurisdiction. So if in the foreign jurisdiction, income earned by a partnership is taxed at the entity level, then it'll be taxed likewise in the UAE. If it's taxed at the partner level, then it'll be taxed likewise in the UAE. That's just to prevent any double taxation, or more importantly, double non-taxation.